One of the things that people see is, okay, so you're telling me I have a cash product and I've got a crypto product. Those are two different types of assets.
Yeah.
I'm very worried about security in general, just in the industry. And so, how do you guys think about the advantages of having FDIC insurance on the cash? And then also, how do you think about the security of the crypto?
Yeah. So I'll preface this by saying that, when people entrust us with their money, that is an extremely high sort of bar of responsibility. It's people's vacation budgets, it's their kids' college funds, and we take that very seriously. And especially as an emerging brand, we want to make sure that we're doing as good or better of a job than the incumbents, so you can feel completely secure about putting your cryptocurrency on the platform. And let me just compare to a traditional exchange. I think that would be, sort of the best thing to just draw a direct comparison to. So and I'm gonna answer both elements of your question, the cash side and the crypto side. So on your traditional exchange, they manage. I'll start with crypto. So on your traditional exchange, they manage their own cold wallets and hot wallets that basically pulls all of the customers' crypto together, and that crypto is considered to be in the custody of that exchange. So they're responsible for making sure that they have enough crypto at all times, that they don't get hacked. They're the single point of authority on approving transfers. That is the traditional way to handle crypto. Now, what we've done in our financial institution as we've built Level, we want to decentralize that security and make it less likely that we would be a point of failure. And so what we do is we work with a company called BitGo, and our wallets are multi-signature wallets that require two of three approvals. Level holds one key, so we can't send your money by ourselves. We only hold one, and it requires two keys to send. Another one is stored somewhere safe, in case either us, or BitGo lose a key. And then the third key is in BitGo's possession. And with BitGo, we implement these institutional policy controls. Only so many withdrawals per hour of a certain value per hour, like of a net combined value. Um, uh, so BitGo is required and it is in a second sign off. But before we even get there, we also perform our own internal reviews. Um, and uh, and our internal reviews, what we're looking for is, we want to make sure that you have sufficient account balance. Obviously, we look for patterns of suspicious activity that might indicate identity theft. We don't want people going on buying crypto in somebody else's name, that whether they're a customer or not. We just want to prevent that. Um, and so we're able to go through these two layers of security: the internal review to prevent fraud and identity theft, and then the BitGo review to prevent unauthorized sends. And we currently, the turnaround time on that is less than 15 minutes, and we confirm at one block, whereas Coinbase confirms at three. So what you're looking at is a procedure that is, or security system that is more decentralized, that has more layers of approval, but is in fact faster than Coinbase. And so that's the answer on the crypto side. The Now let's talk about cash. The traditional way to store cash on a crypto exchange is in a type of custodial account called a for benefit of account. And that is an account that's in the company's name that holds the cash of all the different users. And then what the company does is keep a record of how much funds are for the benefit of each customer. And what you'll typically see, you'll typically see something in the contract that I think is pretty scary, that says, like, we'll never voluntarily give up your funds in an insolvency event, right? So if we get sued, if we go bankrupt and we get in a bankruptcy proceeding, we're not going to voluntarily give up your money. But you do lots of stuff in bankruptcy that's not voluntary. So we wanted to really make sure that the cash is as safe as possible. And the gold standard for storing cash in the United States is an FDIC insured checking account in your own name, because uh, because it's the best experience. If we fail, you can log into that account, you can pull the cash. We're not allowed to touch it. Um, First of all, we're not allowed to direct funds unless it's directly authorized by a customer. So the customer has to tell us every time we direct funds. Second, if something happens to level, you just log in and you can pull the cash off. And then third, it's directly FDIC insured. So if there's a big macro financial event, um, then the FDIC, under the law, will mail you a check for the cash. And I think that really is sort of the highest degree of confidence I think you could have in cash under current North American law.
Got it. And it feels to me like the security component is getting figured out by a lot of people. And obviously, there's been less hacks, which is a good thing overall for the industry. FDIC insurance is an absolute game changer on the cash side. Going to this model of having kind of the true deposits rather than the custodial deposits is another kind of game changer. One of the other issues that's come up on the crypto exchange side is the treatment of private information of the users. So there's been reports that some exchanges have sold information, some are using it for other purposes. Maybe just talk a little bit about kind of what you guys see on the industry perspective, and then how you're looking at treating individual private information.
Yeah. So I want to preface this by saying that like what I've seen on Twitter is a lot of speculation, and it's very interesting to me. Like I would love to like sit down with someone at Coinbase and just ask how they actually handle some of these things, but I don't know. For all I know, for all I like, I just cannot say that I know Coinbase's policies. What I can do is talk about the types of things that come up that affect customer privacy in an exchange and how we've chosen to handle those. Um, so, the first thing that we do the first thing when you create an account that we ask a customer to do is to apply for their level account. So you've signed into the app, but you can't access banking services until we've verified your identity. And this is again to prevent fraud and identity theft. It takes about 2 minutes. We take a picture of your photo ID, the front and back. We automatically fill out all the fields like your name and your address. We have you do a selfie video that authorizes the opening of the account, which we also use to, if you ever get locked out, we can look at that video and make sure that it's you. And then we get a record of your social security number. Um, at that time, that is all exchanges ask for this stuff. Um, a lot of them might like a breadcrumb it, ask for it one step at a time. Like maybe you can buy 100 Bitcoin, but now we need a picture of you. Now you can buy 1,000, but now we need your social, right? We do. That's because they don't want to get hacked, right? The less sensitive information they get hacked for, the better. For us, we collect all that because you're opening an FDIC insured bank account, and the law requires that you collect that. But what we do is we custody that with our banking partner that has decades of experience with no vulnerabilities, right? Like and then we pull information only when we need it. So, like for example, if you buy a debit card, we're going to send a request to the bank, get a copy of your address, and then confirm that with you, and then ship the debit card there. In that sense, the first line of defense about protecting information is just to not have it. We're just designing to not have that information. Now, it is true. I think it is very true that there are laws that have to be followed when you're running a financial institution. Um, we are an exchange. We're a financial institution. We offer FDIC insured bank accounts. And I live in Los Angeles, not Hong Kong. So I have to follow these laws. Now, what we are going to try to do as a business is to be as transparent as possible about what it is that we're doing. And I'm happy to talk about a couple elements of that here today. Um, so, uh, so first of all, some exchanges have a blockchain analytics unit. And what those analytics do is they look at transactions that are incoming to the exchange or that are leaving the exchange, and they monitor, for example, to make sure that you're not withdrawing Bitcoin to one of the addresses associated with that hack that happened 2 days ago. That's a totally reasonable thing to do, right? But some exchanges also take those tools that they've developed to make sure that funds aren't being sent to like kiddie porn operations, for example, which I think everyone would agree is a good thing to stop. They take those tools that they've made available or that they've developed internally, and they make them available to law enforcement. So law enforcement can now use these blockchain analytics tools that were developed by an exchange in order to sort of de-anonymize people on the blockchain, right? Now you can also go a step further, and you could say uh, exchanges, you can't track individual users in exchanges. It's just an idiosyncrasy of the way that exchange wallets work. But an exchange that chooses to sell that type of software to the government could choose to basically split out all their users and their deposit addresses and their withdrawal addresses to add more detail to that map on an anonymized basis. And they could even choose to put the username and the username, the date of birth, the social security number in the de-anonymized version and sell that to the government. There's no law preventing that. I don't know that that is what Coinbase is doing. But I can tell you that first of all, we do not sell analytics technology to any federal agencies. And second, we do not provide personal information on a customer. Um, Basically, with the same policy as Kraken. Like if you subpoena us, we will follow the law to the letter, and otherwise, like you're not going to get information from us. And so, so an example of that would be like there's a thing called a 314B, which is basically a report you file because you saw something suspicious. You're just voluntarily giving that information to the government. We don't file 314Bs. We don't think that it adds value. Um, uh, and then places where we do report to the government, because again, we're required by law, we're going to follow the law. I don't want to go to jail. What we try to do is be as transparent as possible to the customer. So we don't want there to be any ambiguity about what we provided or why we provided it. So, for example, the Internal Revenue Service requires a report if you do more than $40,000 of payment transactions on a platform in a year. So what we do is we of course file that, but we strip it down to the most anonymized form that we can. No, can't see who the counterparties were, the type of trades, whatever. We give them the absolute bare minimum to be in compliance with the law. And I don't think we're trying to withhold anything from them. We just want to respect customer rights as we submit that. Then what we do is we email the customer and say, hey, this is what we sent to the IRS. Here's the reason we sent it to the IRS. By the way, here's the information that you need for your 1099B for your tax filings. And here's your transaction summary. And here's your 8949 like cost basis summary. So we're basically going to follow the law, and then we're going to give the user all the information they need to be fully empowered about their rights. And if I could just give one more example, just because it's unique, it's specific to us being a financial institution that offers bank accounts. Exchanges aren't required to let you know if they sell customer data for marketing purposes, or if they sell customer data for marketing purposes by their affiliates, or if they do joint marketing. They're not required by law to disclose that. A bank is required by law to disclose that. And so once a year, you get, let's say you bank with Wells Fargo, once a year, you're going to get a letter that says, here's all the information we're selling. And if you want to opt out, you need to make 10 phone calls and send 6 emails, right? In our app, there's a privacy notice, and basically we use your personal information to send transactions that you initiate. And we don't market with affiliates, we don't sell with affiliates, we don't market to third parties, we don't sell to third parties. And that is disclosed on an annual basis, and right in the app you can see it. So our model does not require us to make money from the government. It does not require us to make money by trying to sell you car loans, and we just don't do any of that.
Why? Like, when I hear that all sounds great. Why do you choose to go down this path and others don't?
How could I speak to the motivations of other people? I mean, obviously it's lucrative. I think for us, we're a services business, and our customer is the trader. Our customer is the level member. If we were selling this technology to the government, our customer would be the government, And then maybe our product is customer information. But the only customer that we have is the level member. And if was a level member, I wouldn't want any of that information shared unnecessarily. I would want to know if information was shared. I would want to be notified. And I think it's really just the bottom line is the people we serve are our customers, and we don't have conflicting financial interests that I think would compromise us in this area.